Hi guys, welcome to my channel. And as usual, if it's your first time here, remember to like, subscribe, and share the video with anyone whom you might think that it might be helpful to. I offer tutorials on virtual tutorials on Teams. I offer tutorials on Zoom. I offer tutorials on any uh, streaming online platform of your choice. So you can always send a message, drop me a message, and we can offer tutorials to you one-on-one, depending on which module that you would want to be tutored on, but mainly financial modules, financial accounting modules, and yeah, continuously and until you get it right. So today we're going to be talking about the accounting cycle. So I'll try to put the picture or the note at the end of the video. If I don't, I'll just put the PDF, but if not, you get the whole thing if you just keep on listening to this video and you understand the whole thing. So in order for you to be proficient in accounting, you have to understand that it is a cycle. A cycle in what sense? A cycle in the sense that we start at one point and we end at the other. So you should be at a point of understanding that which cycle follows what. So with accounting, basically from the definition, remember we are recording financial transactions that would have happened. So the first thing that happens in the accounting cycle is the transaction stage. So before we can record anything, whatever that we're going to be recording has to have happened. So basically, the transaction or economic activity, depending on the way your institution defines it as. So the first step is going to be a transaction or economic activity. Economic activity as per definition of how they would have chosen to define it, or simply put, a transaction. If there's going to be an exchange, a transactions meaning you are transacting one thing for the other, usually done in monetary terms. So if there's going to be a transaction, that's going to be the first step. So when you have a transaction, what's going to be the next step? You're going to be using what we call source documents. Wherever that transaction is going to be recorded on, that is going to be your source documents. If the transaction is going to happen in cash, you have to have some receipts of sorts. There's going to be some payments of sorts. If the transaction is going to be on credit, it's either it's going to be an invoice or you're going to be giving out a credit note. So it's something that you just have to understand. So the first step, the transaction happened. And after the transaction happened, the transaction is recorded on a source document. Some of these things, they happen so fast and they happen around you and you don't understand what will be going on, but it actually relates to accounting. For instance, you get into a supermarket and before you exit, if you're going to be an ethical person, you're going to exit at the cashier with goods, right? So by the time you reach the cashier, you're going to give the cashier money, you're going to give the cashier maybe a debit card or whatever for method of payment that you're going to be using in that store. Let's use cash for the purposes of this example. So the cashier is going to receive your cash, and as proof that she has received cash from you, she's going to put it in a cash register. And from the cash register, she's going to give you a receipt. There's even other places I'm sure you've gone to when they say if you don't have a receipt for something, it means you're trying whatever that you got was for free. So other institutions or other places, they're very, very strict. You see security guards at the end, they're trying to stand there and stop and check, do you have the receipt? Have you ever stopped to think why they do that? The reason why they do that, they want confirmation that the transaction that just taken place, or that has just happened, which is you giving someone money and getting the goods, has been recorded somewhere. Basically, that is exactly why you have security guards who will be checking your slips and everything. It's pretty annoying sometimes, but that is the main reason. They want to confirm, has the transaction taken place? And the proof of a transaction having taken place is a receipt. Because you transacted, you gave them cash, they gave you the goods. Yes, you came with the goods to the till, but you understand the goods that you're paying, that you want to live with, they are from that shop. So basically, you gave them the goods, they gave you the cash. And the proof of that is going to be your receipt. So the receipt, when you look at a receipt, remember it prints both sides, because I just want to make this thing very, very clear to you so that you understand it. Remember, it duplicates. There are places where you can actually tell them, okay, I was at your store on certain date at a certain time, and they can check the footage and everything. They can even reprint the receipt, meaning what they give you is the original, then they stay with what is called a duplicate because it writes on both sides. So the receipt that you leave with, that's the original slip, but there's a duplicate that's the one that's gonna stay within the store. So the duplicate is what they're calling a source document. So why are we calling it a source document in the first place? Source is almost like how can you what how can you define a source if someone is going to say define a source? You can look it up in the English dictionary, but to just generalize it, it's like that's where if they're saying find the source of something, it's like that's like a genesis. It's like a beginning, right? The source document. So that document is the one that is going to be the beginning of your recording. Your recording is gonna start from the source, and the source is going to be, for the purposes of this example, remember I said it's you in a grocery store. So for the purposes of this example, it's gonna be your duplicate cash register or a duplicate receipt. So you then take the duplicate receipt and you're going to write it, but where are you gonna record the duplicate receipt? You're gonna record the duplicate receipt in your subsidiary journals, which becomes the third step. So we have a transaction, we have a source document, and we also have the subsidiary journals. So these journals, you're going to be guided by the type of transaction. So you have to be able to decipher from whatever that you've been given. Remember, sometimes they give you transactions depending on how they're going to be testing you from your institution. Sometimes they give you transactions, and if they give you transactions, you have to be able to tell, okay, was this cash? Was it credit? If you can differentiate, it means you're gonna be able to tell what kind of subsidiary journals are we gonna be talking about. So sometimes they'll be saying, if for the purposes of work, those who are doing the basic accounting or the first level accounting, sometimes they're gonna say an invoice was issued. So an invoice being issued is simply telling you that it's credit. Remember, invoice is a source document for credit transaction. If they're gonna say there's a duplicate receipt, you have to know that this is for cash. So we're gonna be having that too as differential. So you have to be able to understand, is it going to be a credit or a cash transaction? So if it's a cash transaction, you're gonna be dealing with your cash receipts, cash payments, and petty cash, and other journals that they might come up with. But usually those are the main journals that you use for cash transactions, because they even highlight to you cash such and such, cash such and such, petty cash journal. Cash is involved in that. So it tells you where you are going with whatever that you'll be trying to record. So you generalize everything, you put everything in subsidiary journals. After you've put everything in subsidiary journals, you then take the information from your journals and you put them in a general ledger. And when you put them in a general ledger, you're gonna have your debit side, credit side. I've already made a bunch of videos that will thoroughly explain that part for you. So you then generalize the things, make sure that your trial balance balances as your step 5. And once your trial balance balances, you then get financial statements at the end of that process. So that would be that in terms of steps. And in other books that I also read, the last step will be decision making. Remember, you are doing this accounting for the purposes of other people to make informed decisions. So your duty is to make sure that you interpret a transaction to a point where someone can make a decision. So there is a transaction. What is going to be the transaction? There's a purchase, an exchange, basically. If there's an exchange, you now have to tell, okay, was this an exchange? Was this exchange including cash? If it included cash, it's a cash transaction. If it included credit or an invoice was issued, it's a credit transaction. And then you move for your source documents. From your source documents, you're gonna go to your journals. From your journals, you go to your ledger. Ledger, you're gonna do your trial balance. From your trial balance, you're gonna go to your financial statements. From your financial statements, people have to make decisions on those statements. And when people make decisions on those statements, then that will be the last step. So try to arrange them in that order, depending on whatever your institution is going to be naming them. Just try to decipher, okay, this step, this looks like a transaction. Someone gave something and got something else. That's a transaction right there, especially when there's money. There's money involved. If it's not money, it's cash. It's not money, it's cash. If it's not cash, it's credit, either cash or credit. If there's an exchange of cash and credit, then definitely there's a transaction that took place. Then what happens to the transaction? The transaction has to be proved. How are you going to prove that the transaction did take place? It's going to be recorded in a source document. It's going to be recorded in the source document. Once we have the source document, you can then use that source document to populate your journals. From populating the journals, take the information in your journals, put it in the ledger. From the ledger, trial balance, financial statements. So accuracy also becomes a thing, because if you are going to record an incorrect source document, that error is going to be taken to the incorrect journal. It's going to be an incorrect ledger, incorrect financial statement. So depending on the institutions, some institutions, they say we don't punish you twice, meaning if you make a mistake on the source document, they're not going to punish you for the same mistake on the journals, depending on the institution. But they also put a lot of other things, including the materiality of the mistake that you've made. And so the idea with you understanding, we don't want you to be 100% accurate, but we want you to at least know what goes where and why something happens. So as a student for accounting, you should be able to tell us the entire accounting cycle with your eyes closed. What starts? Transaction. Where is the transaction going to be? It's going to be recorded. Where is it going to be recorded? And then what are you going to do with that information that's been recorded? You're going to put it in a journal. After putting it in a journal, what are you going to do with the information? You have to put it in a ledger. From your ledgers all the way to the financial statements. You should be able to understand that part. Then you can then get in depth. Okay, this is a performance statement, this is whatever statement, but that is like the overview of a financial or an accounting cycle. So please do leave a like, share, subscribe, and those who want tutorials, they can inbox me and you can send a WhatsApp. And please ensure that it is me whom you're talking to or whom you're interacting with before making payments for any sort. Please. Thank you for your time.